please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Live from Hong Kong, this is Squawk Box. This is Squawk Box.
Hi, it's hour 2 of Squawk on a Tuesday, 8 a.m. here where we are in Hong Kong. Your headlines on this Tuesday morning. DRAM demand driving earnings of Samsung Electronics to record highs, but profits not a problem. The board meeting to approve a new president as the Korean company looks for new engines of growth and leadership. Game on, meantime, for Nintendo. Profits surging as gamers line up to get their hands on Switch consoles. Despite the threat of a new Xbox next month, the company lifting guidance for the year. And Kobe Steel coming into play after reporting an almost 40 billion yen profit for the 6 months of September. That didn't, as you might expect, include any impact from the data falsification scandal, which forced them to pull their forecast for their first annual profit in 3 years. Let's get out to Akiko to find out what the impact is on Kobe Steel with what we talked about. Also, the Nintendo and the Bank of Japan decision. June is watching, of course, Samsung Electronics today. Hey, June.
Hi, Bernie. We are actually looking at a lower start for both the Kospi and Samsung Electronics this morning, coming off the all-time record levels that the Kospi closed at during yesterday's close, and Samsung Electronics also coming off its record levels. Third quarter earnings numbers that came out just about 30 minutes ago showing an all-time record operating profit number of 14.5 trillion won, in line with their earlier guidance and up almost 3 times what it was during the same time last year. Revenue 62.1 trillion won, higher than the 62 trillion won that they gave us as guidance, and their operating profitability ratio at a record high of 23%. Today we'll be watching out for updates from the board of director meeting that will be happening in just about an hour's time from now. They will be making the final decision on the scope of shareholder return for the next 3 years, as well as appointing a new vice chairman and CEO of Samsung Display to replace the former vice chairman Kwon Oh-yeon's position. In terms of shareholder return in the short term, cash dividend has been announced at 7,000 won per share, almost 1 trillion won in terms of the total size, and share buyback 712,000 common shares, 178,000 preferred shares, more than 2 trillion won worth of Samsung shares. The third quarter, in terms of the breakdown, was the first time ever that Samsung's memory chip division hit the 10 trillion won operating profit mark, up 38% year-on-year. Revenues at 20 trillion won. Also, it's almost 2/3 of the entire company's operating profit number. But in terms of the mobile division, they are also showing a very sharp rebound from the same time last year, up more than 3,000% year-on-year, during which last year, during the same time, we had the Note 7 situation, which meant a very weak quarter for them. So in terms of the earnings, very strong, but the numbers, the stock price now coming off the highs, down about 0.9% at the open. Akiko, over to you.
All right, thanks for that, June. We are seeing the Nikkei down at the open over in Tokyo on the back of some economic data that we got just a short time ago. September household spending down 0.3% from a year ago, although that was not as big of a fall as analysts were expecting at 0.7%. Also, industrial output down 1.1% month on month in September. So investors perhaps responding to some of that. Some big corporate headlines we're following over in Japan. Nintendo to start with. This is a stock that's been up 75% on the year, and we are expecting to see a pop. Let's see if we can flip the wall to see where it is. Nintendo shares not trading just yet, but expected to get a pop there on the back of some strong earnings. The numbers we got out yesterday with the company raising its sales forecast for the console Switch, saying it now expected to sell 16.7 million units in the fiscal year, more than tripling an earlier forecast of 4 million units. Nintendo also nearly doubling its forecast for operating and net profit for the fiscal year to 120 billion yen and 85 billion yen. The revenue forecast raised to 960 billion yen from 750 billion. SoftBank also in focus today on the back of Nikkei reports that the SoftBank Group plans to break off Sprint merger talks with T-Mobile. The Nikkei reporting the two sides have failed to reach an agreement on the terms of the deal, and SoftBank is likely to approach T-Mobile's owner Deutsche Telekom as early as today to end talks. But our colleague David Faber over in the U.S. reporting that that's not exactly the chatter he's hearing over in the U.S., saying that yes, SoftBank does have concerns about governance and the power that Sprint will have in any type of merger. T-Mobile also raising concerns about potential exchange ratio and the price would ultimately be. Sprint shares we saw down more than 9% in the U.S. session, and we are seeing SoftBank down more than 5% as well. Now for a look at how things started shaping up in Australia, let's head out to Matt Taylor, who's standing by for us in Sydney. Matt.
Akiko, thanks very much. The Australian market has, of course, been up and running now for an hour, and we've got the market higher by about 0.25%, 14 points firmer, 5,933. Take a look at the All Ords, though, just only 2 points now away from that 6,000 level, which has, of course, been elusive in about a decade or so. We'll continue to watch and see if we can make it over that level. 76.92 on the currency ahead of China's PMI numbers that we're waiting for a little bit later on today. Check out how the banking stocks are doing, because Westpac fronting the federal court to defend itself against those rate rigging allegations. It will not settle with the Australian Securities and Investments Commission, instead going ahead with this court proceeding to try and clear its name. Of course, the ANZ Bank and National Australia Bank both settling with the corporate watchdog. Take a look at Bendigo and Adelaide Bank. That company will be holding its annual meeting a little bit later on today in Bendigo. And at the conclusion, we're going to have a first on CNBC interview with Mike Hurst, the managing director over at Bendigo and Adelaide Bank, who will be able to tell us about what is going on in the banking space right from the coalface, as concerns about a royal commission into the banking space loom amid this political uncertainty in Canberra. One other stock we're watching today is Woolworths. The stock extending gains, now up by better than 2% after growing sales over the first quarter. A 3.7% lift in Q1 sales from continuing operations. Q1 food sales are up by 4.7%. Despite the fact that we've seen price deflation and falling food prices, Woolworths says those were down 2.4% over the quarter due to lower fruit and vegetable prices. Let's show you what's happening with the New Zealand market as well, because some really interesting business confidence numbers as well that have just crossed in the last few minutes. Business confidence over the month of October plunging by 10.1%. This is according to the ANZ Bank. And of course, that is amid that political vacuum, Bernie, that we saw for pretty much the entire month of October of course, those negotiations between Winston Peters and both sides of politics going on throughout the month. It appears business really took its foot off the accelerator over that month while we awaited to find the outcome of that general election. Back to you.
Yeah, it was kind of like hanging around in limbo, waiting to see who was in charge before anything could happen economically. Yep. But now we know, and they went down a different path. Okay, thanks, Matt. Getting a look at the first charges filed in the ongoing Russia investigation. Two former Trump campaign aides, Paul Manafort and Rick Gates, each face a dozen charges. And a former advisor pled guilty to lying about his meetings with Russians while working for the campaign. NBC's Blaine Alexander with more.
Former Trump campaign manager Paul Manafort and his deputy Rick Gates pleading not guilty to charges in special counsel Robert Mueller's investigation into Russian election interference. We are also learning former campaign advisor George Papadopoulos secretly pleaded guilty earlier this month to lying to the FBI. The plea agreement says he was communicating with a Kremlin-connected Russian who promised dirt on Hillary Clinton, then lied about it all to the FBI.
He's not been indicted. He's actually pleading guilty, which may be the first sign that Bob Mueller has a cooperating witness in this entire case.
The White House distancing the administration from Papadopoulos.
He was a volunteer member of an advisory council that literally met one time.
Manafort and Gates are accused of lobbying for pro-Russian Ukrainians and not paying taxes on tens of millions of dollars. They're facing 12 charges, including conspiracy against the United States, conspiracy to launder money, and making false and misleading statements. The indictment makes no mention of President Trump or Russian meddling in the election.
Well, I think you all saw today that President Donald Trump was correct. There is no evidence that Mr. Manafort or the Trump campaign colluded with the Russian government.
There's been no evidence of Trump-Russia collusion, and nothing in the indictment today changes that at all.
On Twitter, the president emphatically repeating there was no collusion, saying about his former campaign manager it was years ago, before Manafort was part of the campaign. But his same Twitter account showing a March 2016 picture of then candidate Trump sitting with Papadopoulos during a campaign season briefing. Blaine Alexander, NBC News, Washington.
Chinese President Xi Jinping is telling corporate bigwigs that China is committed to reform. Among those in the audience, Tim Cook and Mark Zuckerberg of Facebook. Eunice joins us from Beijing. Eunice, I thought you said Facebook wasn't available in China. I just went to Facebook and I went in the search bar and I put Xi Jinping. He is all over the place. Oh, maybe that's not him.
He might be on Facebook. Yeah, it might not entirely be him. I'm not sure. What are they posting? Did you check?
He said socialism with Chinese characteristics. Han Hao, very good.
Wow, you're kidding. Like you're kidding, because actually at this event at Tsinghua University, which is at the management school, he was the keynote speaker, and what he was driving home was socialism with Chinese characteristics for a new era. And so he had also told the executives who were there that China has the confidence to pull off this vision. And he also said a lot of things that foreign investors like to hear. That is that China would deepen its economic reform, that China would strive to have a fair and more transparent environment for overseas investors. And what was also interesting is how this is being covered in the state press, because the state press was also reporting that that the executives there were congratulating President Xi for his very successful Party Congress event, which happened over the past couple of weeks, and also that they said that they very much wanted to contribute to the economic development of the country, and they wanted to hear more about his plans about innovation. Bernie.
Okay, 10,000 people liked his last post, so it would, if it's not him, it's very popular, whatever it is. Thanks, Eunice. Okay, let's check on the Asian market and see what the tone is, because earlier we were kind of 1 foot in the bucket and a little bit red there. Still are 147 down in the Nikkei. The only markets up there is the ASX. Jeff Kleintop, Chief Global Investment Strategist at Charles Schwab, joins us from Boston. Hey, Jeff. Where are these markets going? I just talked to somebody who said this tax reform thing that the Republicans are going to table is the biggest thing since sliced bread, and if tax reform goes through, it'll bring down the PE of the S&P to 15. Wow, what a buy.
I wouldn't buy that. Look, the way we look at it, tax reform is a nice sort of icing on the cake. Obviously, it's a little bit of a boost to the bottom line for companies that would benefit from a lower statutory tax rate, which, by the way, isn't all companies. Some already have a very low effective tax rate, like the tech sector. Financials, a few others would benefit from this. It's probably 5, 7, maybe at most 10% to the bottom line. That's not the main thing driving equities higher. October is going to make it 12 months in a row of gains for the global stock market. That's the MSCI World Index, up 12 months in a row, unprecedented. We're still bullish, though. It's that backdrop of global economic growth that continues to improve that I think is the main driver pushing stocks higher, not hopes for tax reform.
Right. Okay, the world's a big place. What are you most excited about outside the U.S. Right now?
Japan's really exciting right now, and one of the main reasons is, I think we're starting to see some inflation pick up globally. It's early signs and definitely not in the bank just yet, but that means better performance by the financial sector, and the Japanese stock market correlates extremely highly with the financial sector. It's basically acts like a financials ETF. So if financials begin to perform, it's done a little better lately, that should continue this recent outperformance by the Japanese stock market.
Jeff, a lot of this is you've hit it. You really hit this one on the head. A lot of people are talking these parts, especially during that 3-week spurt, which we saw day after day of gains. I mean, we haven't seen. I don't think we've ever seen that before, at least not in modern times. But where does that leave us? That leaves us 40% below the top. And this morning we had household spending figures which show a reticence in the domestic economy. If domestically they don't get going, no amount of foreign ownership and foreign participation in the stock market's going to fix things, right?
Well, I disagree. I really think that the better global trade picture is actually a very bright spot for Japan. Japan's very, very dependent on trade, obviously, as an economy, and that is really quite bright. Global trade is actually running at the fastest pace we've seen since just a brief spurt in 2011. You got to go way back before the crisis to see global trade running this quickly. I think that's a big part of what's driving GDP. You've also got, just as an aside, better income growth, just slightly better income growth, not wages, but income growth in Japan, thanks to more women coming into the workforce. And if that trend continues, that could be enough to support consumer spending and even boost the domestic economy, something we haven't seen in a long time.
What do you have a position on the yen? A lot of people have been passing by this show and saying that 113 or wherever it is right now is ridiculously undervalued, and that given the state of the economy, you know, that the gains that we're seeing or will see in wages, that this is easily on par with the U.S. currency, with the U.S. cent anyway.
I don't think we're going to see a lot of strengthening in the end. In fact, you know, we would think that maybe that even weakens a little bit here from here. The reality is that, you know, what we've seen is a sharp movement with the 10-year yield, right, in the U.S. So as that continues to move higher, we do think it will continue to move higher over the course of the next year. That should alleviate some of the strength that we've seen in the yen and continue this trend of weakness, which has always been a good thing for Japanese equities. A weaker yen tends to be good for the stock market. I think that's the trend. This is not going to be dramatic. Our view is a relatively modest move, not sharp from here, but further weakness, not strength in the yen.
Right, and let me give us a comment on China before we let you go. Jeff, you probably watched the Congress and the what's the word, elevation of Xi Jinping to godlike status or Mao-like status in China. Does any of this have anything to do with the market or the economy as far as you're concerned?
You know, only in the sense that we're likely to see a continuation of some of these policies, obviously, that have been put in place. It's definitely not a situation where you might see with the U.S. election or something that might have taken place in Europe where a sudden departure in strategy. That is not going to be the case, and that's a good backdrop for corporations to continue to invest in China, continue to build their presence there. That is a huge consumer market for many U.S. businesses and global businesses as well. I don't see that changing anytime soon.
Still hot at 60. Brent surging above 60 a barrel and bets OPEC's going to extend oil output cuts, and that's got one investment bank upping their 2018 forecast for both classes by $11. Dan, tell me it isn't true. I thought they said that all the U.S. output was going to put a cap on things at 60.
Yeah, that's right. So we're in quite a fascinating dynamic for the oil market right now, Bernie. Prices as they stand here in Asia, well, look, we are seeing somewhat of a moderation here. Oil was up almost 1% in the US session, and there's essentially two major catalysts at play. Number one, we're seeing increasing commentary now about the prospects of an extension to the OPEC and non-OPEC supply cut deal. Remember, this has been in place since January of this year, a pledge by those major producers to cut 1.8 million barrels per day out of the market has been mostly effective in helping to raise up prices. And what we're now hearing is more commentary from the Saudis, more commentary from their colleagues in Russia about an extension to the OPEC supply deal from March of 2018. And if we did see that extension, that would be broadly supportive for oil prices. And then at the same time, we've also seen 4 consecutive weeks of crude inventory draws. And those draws are really being led by not only increased refinery activity, but also record exports. And that's been helping to support prices. So that's why we now have Brent touching what is a July 2015 high and WTI at levels that we haven't seen since February. That was in the US session. We're seeing some some profit taking here in Asia. Brent still above this 60 handle though, 60.84 US a barrel, down 0.10%, and NYMEX at 54.04. Now, JP Morgan is a little more optimistic on the outlook for oil prices. They're the bank that's out with the revision today. They say that they're upping their 2018 Brent and WTI forecast by $11. They say not only does that reflect the possible OPEC extension, but it also reflects what they see as higher demand growth moving forward and, more broadly, a tighter market. Bernie, back over to you.
Okay, 60 plus it is then, or it looks that way. By the way, speaking of oil and energy-related companies, Saudi Aramco, we haven't given up on it totally here in Hong Kong. The exchange chief, Charles Lee, says he hasn't given up on it and says that we might have a strong chance during the Asian leg of the IPO. Lee says there will be a listing in Saudi, there will be a listing in London or New York, there will be a listing in Hong Kong as well. Speaking of IPOs, an IPO called Razor headed your way very, very soon. They're looking to raise $550 million in a Hong Kong IPO. Emily's on top of this story. I can't figure out why a company that does stuff like this would be worth $500 million. That's an old idea, no?
It's not quite the same thing, Bernie. We're talking about gaming hardware.
Oh, okay.
The company's called Razor, R-A-Z-E-R. Yeah, so we're talking about a new IPO to hit the Hong Kong market. This is esports. So this is a new sport that you can get involved with. That's not quite esporting. But $550 million to be raised here. They're book building starting from today, issuing something like 1 billion shares at a price range of $2.93 to $4 each, and the funds going towards acquisitions as well as developing gaming verticals. The company is going to be pricing the stock on November the 6th, and then in Hong Kong tradition, the way it works here, it will list in Hong Kong 1 week after that, being November the 13th. I've got some big companies behind it, like Li Ka-shing, also Intel backing the company, also signing up something like 5 cornerstone investors, $153 million. So look to Razor, a gaming hardware company coming to the Hong Kong market, $550 million.
Wow, and it's all about people sitting at computers and playing for 36 hours straight, right? No food, no toilet breaks, no water, no human interaction or anything.
Well, the human interaction is done through the computer, right? Because there's players on the other side. So this company makes the hardware that allows you to do that.
So why are we even human beings? I mean, you know, we interact through a pipe, right, into the next parallel quantum. I mean, there's really no need to exist as a human being. We should just be, you know, electronic diodes or something.
Well, we're existing through some tubes right now to our viewers out there.
Well, you're real, aren't you?
Yeah, I'm real and you're real.
Pinch me. Pinch me. Okay, so it has nothing to do with Razor then?
No.
Okay, R-A-Z-E-R. Thank you.